Okay, good afternoon, everyone. I'm just going to start off the session by sharing a bit more about what I do. Then I'll invite my panelists to introduce themselves. I'm focused primarily on AI innovation. I'm a practitioner. I also teach the subject at the National University of Singapore, where I run programs on AI innovation, intellectual property protection, and commercialization. So my current practice focuses on AI value delivery. With that, I'll invite the panel to introduce themselves. We'll start first with Gautam to say a few words about themselves before we begin.
Yeah, thanks, Zaid. Three of us have been on panels before, and we're discussing where we always get the lunch slot. So, it's a tough slot, but bear with us. I'm Gautam Saxena. I head investment banking for ING Asia Pacific. We are very focused on the key sectors of the topic today, digital infra, renewables, and we are very active in these sectors across APAC. Thank you.
Hi, everyone. And again, I feel like it's bound on me to apologize for keeping you guys from lunch. We realize we are running late. Hopefully, we'll have an interesting discussion here today. My name's Jacqueline Chan. I'm a partner at Milbank, which is an international law firm. We too specialize in capital solutions, in whether it's mergers and acquisitions, investments, financing. And in particular, we've been a strong leader in the digital infrastructure space, whether it's been in data centers, fiber, towers over the last couple of years, and we've seen that market really explode. So happy to talk about it.
And I'm Suresh Sidhu. I'm CEO and co-founder at EdgePoint. EdgePoint is a multi-country tower platform. We operate in Malaysia, Indonesia, and the Philippines. And as of 3 weeks ago, we now operate over 16,000 sites across those 3 countries. And I'm very pleased to actually speak on something I've never spoken about before, which is compliance and regulatory. So, it's, I'm normally on very different panels, but looking forward to it.
Okay, thanks very much. Okay, so we are going to cover a few issues, and I'm going to have 2 rounds of questions for my panelists before I invite you, right, to participate in the floor. Now, here's setting the context, right? Here are the issues that I like all of us to think about, and where we're going to focus our discussion on. Now, in the context of risk, when you are dealing with strategic investment in digital infrastructure, there's essentially two layers of risk that we're looking at around. The first one that we are all very familiar with is the current geopolitical challenges. But for this discussion, we're going to focus slightly on the second level, which is country-specific regulatory challenges and constraints. What are the issues? And my panelists will walk through not only the risk issues, the specific types of regulatory constraint, and they will share with you how they're going to navigate, right, across this evolving policy environment. And most importantly, we'd like you to leave this session with some very practical ideas. How do you go about solving real problems on the ground? And I'll be inviting my panel to share their perspective from a practitioner perspective. So I'm going to first start with Gautam, right? So what we're witnessing now is a major global shift. There are, in some instances, the new government, there are regulation, there's completely shifting order of things, right? So Gautam, my first question to you is, how do investors, most of them who are here present in our audience today, right? How do they get themselves more comfortable in this environment that is constantly changing, right? How do they make sense of it? What should they do? So let us share your insight, and we'll take it up from there. Gautam?
Sure. I think just stepping back, when we talk about how investors get comfortable with the evolving environment, I think it's just good to understand what is the current environment, right? We are living currently with 2 wars ongoing, which have been ongoing for a few years. We've got unknown territories in terms of wars. The attack into very safe havens like Doha, for example, unpredictable. Skirmishes in regions nearby, Thailand, Cambodia, India, Pakistan. When is that third war happening? Secondly, transformative policies out of the US continue to evolve. They have global ramifications. And then we've seen closer home, regime changes, Nepal, Bangladesh, a few years earlier, Sri Lanka, constant political change in Thailand, right? I'm not even talking about Myanmar. I think what we all have to understand is, I don't want to say this is the new normal, but we're all living through this. We're living through constant change, unprecedented change, and we are still looking at folks deploying capital. Of course, exits are a bit constrained right now, but fundraising is on. A bit uncertain in today's environment, but I think we all have to understand that this probably is the new normal and we have to live through this, right? How do we deal with it is something we have to get deeper into, and I'm sure you have other questions around that. But it's important to set the context around this. One specific point I'd like to raise is unexpected changes in Indonesia. Very close to us, very important for us in Singapore, a bellwether for Southeast Asia. It's early days. There's a new government. Everyone's trying to read through the lines, decipher, wait for the clouds to lift, and we'll see how that goes. But we have to understand that when governments change, there will be changes in priorities on the regulatory side, on national priorities, and that is something, again, we have to get used to, and that will happen along the way.
Now, let me now shift to Jacqueline. She's a practitioner. Right? So what I'd like you to focus on, Jacqueline, for our crowd is from a legal regulatory perspective, right? In terms of the specific, what do you see as some of the biggest risk issues, specifically focusing on the challenges that investors face, right? And when investing into digital infrastructure.
Thanks a lot. It's a really big question, obviously, and for all of us who are involved in this region, in the APAC region, we're very clearly and keenly aware that the main differences of APAC, of investing in APAC versus investing in the US versus investing in Europe, is the sheer variety of regimes and political and regulatory concerns that each of us would face here. And yet the need, for example, what Suresh is looking through and what Gautam looks at, is that almost every investment of scale needs to bridge multiple countries in APAC. And therefore, when we think about what are the risks in the regulatory side of things, in going through an investment, we're keenly aware that each country has its own set of concerns and considerations. I would say, without going into each one specifically, because that's a very large topic on which I'm not even sure we would have the time to spend, and we would want a lot more input into that. I think the key focus that you would see is obviously a couple of things. One is that there is obviously regulatory fragmentation. And Suresh is probably, he lives this on a daily basis. What you see in Indonesia is not the same as what you're going to see in Malaysia in the data center space. That's everything to do with power requirements, it's everything to do with zoning requirements, it's everything to do with possibly foreign ownership and how that accords. And it's got everything to do with the localization of data and the storage of data that drives also the local demand for what you're looking at in terms of customer space. Secondly, you're looking at political risk across each of these jurisdictions and how you would mitigate any of that. Sometimes that involves perhaps taking on a local partner. Sometimes that involves just looking into the extraordinary political spectrum and figuring that out, for example, in Thailand versus Malaysia, and how you would address any of that. And finally, the third thing for any global investor in the APAC space that you do need to consider is obviously your currency and structuring risk in terms of just hedging, how you would expose your investment risk in any of these jurisdictions. We've seen, because of the turmoil that Gautam alluded to earlier, we've seen APAC currencies take wide swings this year, and sometimes in unexpected ways. And so for any investor in the short, medium, or long term, that's always going to be something that you're going to have to consider when considering your contractual regimes and limitations and terms.
All right, thanks very much, Jacqueline. So she's covered so far key risk issues relating to regulation, political risk, and I especially like your last point, right? Structuring risk, which brings me now to Suresh, who, from a practitioner and a perspective, right, Suresh, as a founder, right, with investors flush with capital and still needing to deploy them, right, to achieve gains, right? How, from a practitioner perspective, real-world context, right, how do you address this issue of compliance while at the same time ensuring you comply with national policy objective, right? So investors must play the game, right? Not just to deliver value across corporate, but you have to ensure compliance with national policy objectives. So Suresh, I'd like to invite you now to share your perspective. How do you balance this against a very increasingly very complex environment that we are in today?
Look, I think one thing I've learned, Zaid, and I think also building on the comments of my fellow panelists here is, typically when you try to set something up, you're very focused on the big story, large numbers, massive growth potential, and that's obviously your pitch, and that's what attracts people to come to talk to you. But I've also learned that while investors are keen, and there's, yes, a lot of money that can chase you for an opportunity, I think investors are most comfortable taking sectoral risk. They're much less comfortable taking national, macroeconomic and compliance risk. So I think as a founder, you have to think very early on about making your business investable for the long term, right? So I think many people miss this, and clearly in my early stage of my career, in different companies, it was never an obvious topic. But setting something up for yourself, you realize that in order to have a stable, long-term, valuable relationship with a group of investors, if you don't solve investability questions early, you can't even think about, A, calling down the equity they're willing to give you, and you can't even think about preparing for exits or future investors as well, right? So when we talk about investability, for example, from the EdgePoint point of view, a couple of things. One is just selecting markets that have a more common, stable, understandable regulatory framework. Things are written down, and they're written down reasonably clearly. First step, right? Second step, prefer to invest in countries where the rule of law is, considered sound, and that you can commercially sue people, and you might even be able to take a government to court, which we never do. So, but so I think from an investor point of view, they want to see that you understand your choices, your design choices around this platform you're building have taken all those considerations as much as possible into being as well. And the third thing is that clearly, because you will have covenants with your investors, they have LPs and other people. You may have sovereigns, as we have. We have ADIA as an investor, for example. You have to also, from day one, ensure and reassure them that you're building quite a high degree of compliance into your business as well, right? They're all relatively passive, so they trust you, and I think you have to be somewhat worthy of the trust. And so what we've tried to do is always make sure that we've invested time and effort around building compliance into the process. Seems rather odd when you think about building a startup and something that needs to scale very quickly, but that's a challenge that the founders, I think, today really need to do. The second thing you need to do on the question of national policy objectives is, I think, to explain to investors that if you want to operate in ASEAN, and this has been my home really, so I really do look at it, it's a region where national policy is important. And as a CEO of a telecommunications firm or utilities firm or some element of infrastructure, you're expected, and a national also, by the way, you're expected to participate in these national discussions and grow and support national policies as well. And so your business is commercial, and you have to stay focused on the commercial line, which is what you're trying to explain to governments. But you have to explain to your investors that we also have to participate in selected national projects because it's the rigor norm, right? Now the balance is finding the right projects, finding the right way to contribute, making sure that it's commercial, making sure that nothing that you're doing is anything other than good business sense as well, right? So these are all unique, I think fairly unique elements to the ASEAN business model, particularly for digital infrastructure.
All right, thanks, Suresh. So it's a very difficult balance that we need to maintain, right? Between ensuring investability and then managing the risk. So in my view, right, regulatory and compliance risks are a strategic issue. It's not an administrative issue. It should never be a cost center, right? So with that in mind, my next question I'm going to ask Gautam specifically, right? 30% of all you today are from the investment side. So I want Gautam to focus on one key issue, right? How should investors price in regulatory risk in this current unstable environment? It's a very complex issue. There's an equation that all of you, right, as investors need to maintain in the value chain. Then the question then is, how do you price in such risk? So the kind of issues that we need to consider are, for example, what's the best way to deal with uncertainty and volatility? And in that context, what's the shortest time to value, right? So Gautam, back to you again. How do we then de-risk and how do we price in regulatory risk in the overall investment equation?
Zaid, thanks for that. I think, again, broad question, a lot of elements in that. Let me try and summarize the gist of it. Look, I think the growth metrics and the growth proposition of ASEAN, right, and Asia in particular, is undeniable, right? We are hungry for data, we are hungry for consumption, and we are seeing that play out, of course, on data centers. We're seeing that play out on the towers utilization and on fiber, right? So I think the investability and the investment proposition is clear. Investors are incentivized to invest, right? Their business model is to go out and raise capital from their LPs, convince the LPs about the growth proposition, invest, run the business as well, do operational excellence, and then drive exits, right? And that thematic is undeniable, it's there, so that will keep on happening, right? Now, how does that fit in with the current environment we are in, right? Your questions around de-risking, pricing. De-risking is a very strong word, right? It's all relative. But I would kind of break it down into things in our control, things not in our control, right? It used to be that what's in our control is the investment thesis, the growth proposition of the market, what we could do on the operations of an asset we are buying, and then drive that to an exit, right? Linked to that, on the operational side, is regulatory stability, because you're operating, particularly in infrastructure assets, you're operating under a strong regulatory regime, and you want visibility and clarity that this will stay for the proposition of your thesis, which you've gone to IC for, right? However, what we're seeing now is as we have new governments coming, national priorities evolving, promises made to the electorate, because we have a young demographic here, a demanding demographic. They want to see changes. So that is adding a bit of a cloud on visibility over the 5-7 years on your operational plan. Things not in our control, policies, politics, geopolitics, which are all now impacting also operations, and massive shifts in currency, as Jacqueline was alluding to, right? You would always factor in 3-4% depreciation a year on currencies, but you were not ready for massive shifts, which then really impact your investment case significantly, right? So I think de-risking is tough. I think what one has to think through is, and what we're seeing more of, is you go in with the vision and the conviction around the investment case. You run scenarios, right? And those in scenarios now are extreme swings, which never happened before. And either it's just not worth it, so we hold off and wait for clouds to lift. So this is not for us. Or we say, okay, we put a probability on that, and then say, the investment thesis is so strong that we will be able to, weather it in spite of certain unpredictability and factors which are not in our control, right? But I think, we are starting to see over the last couple of years a lot more of holdback, a lot more of scenarios which are not working out. So, yeah, I think it's an uncertain environment right now. The one thing I will say, there's no substitute for being present and being local in these markets. There are certain investors which do stand out, who have been through the cycles, have lived through it. The ICs are comfortable, global headquarters are comfortable, and that takes time. That takes miles on the odometer to say, okay, I've seen this before. The growth proposition is clear. We will survive this and we will live through this and things will move, because ultimately rationality will set in governments, the stakeholders of the various governments, and the policy setters.
Thanks, Gautam. We've been discussing how complex and how challenging the environment is. I want to focus a little bit deeper on something more practical. So Jacqueline earlier on raised issues relating to effective structuring, right, and managing structuring risk. So Jacqueline, can you just share with the audience, right, real world example and your practices, right, in dealing with a highly complex regulatory environment, but just share with us some very narrow perspective on how deals can be structured. If you can, share with us some real world example that our audience, that resonates with our audience. So specifically, Jacqueline, my question to you is, please share with us, the audience, right, how you would manage structuring risk, and give us some real world example. Jacqueline?
So as a lawyer, I love structuring. It's the most fun part of a deal, right? It's the one time that you get to exercise creativity up front with the sponsors and with the bankers, and you sit there and you try and craft the problem and you figure out the solution. Structuring is fun. It's creative. But you have to figure out what's the problem you're structuring for. So I'd say two things. In the data center digital space, at this point in time across APAC, outside of China, we've seen that there's been a lifting of foreign ownership restrictions, right? So Vietnam's lifted it, outside of China, everybody kind of allows 100% foreign ownership. So we haven't needed that relatively complex structuring in the equity capital structure that we might see in other sort of spaces. So that's been an interesting thing. What we have seen, however, though, is that if, and I'll do this on a more prospective basis, if at any point in time data centers or otherwise need to be structured in order to comply with local telecommunication laws. For example, we know that in Indonesia, there are very specific laws surrounding the licenses given to, for example, fiber companies or otherwise in order to satisfy that. So there are deals in the market right now, which, as I think people in the room know, have undergone significant structuring in order to comply with licensing requirements through carve-out of businesses and assets and otherwise. That, I think, becomes a discussion point. That you structure through separate ownership, related ownership, you structure it through quasi-equity structures, and then you've got to figure out the related party transactions that underpin the commercial arrangements to allow for the carve-out co to actually continue on a commercial basis. And those, I think, are the key structuring points that we would do. I would talk a little bit about, what we've seen in other jurisdictions, which I think is interesting for investors in the room, only because it's not happened in APAC yet. But if it ever does, it would be something of worth. So Milbank was involved in certain national security transactions in the U.S. We did the Nippon Steel U.S. Steel transaction. We were also involved in MP Minerals, so that was both on rare earths as well as on the steel side. And what we saw that was a change from previous governments in the U.S. Was the willingness for the government to come in and take a stake in these companies, which were either publicly or privately held. But there was a change in the capital structure to give the government effectively either a golden share or certain reserve matter rights. And that has only really been done in China so far, really, to date, in the level of approval, although obviously private equity investors have used elements of these structures in some of their transactions to try and obtain specific control where you're not matched by economic involvement. So I think there's a lot of different structures to talk through, but when we're talking about regulatory, in the past we've always seen regulatory compliance to be structured through equity ownership and how you comply with equity limitations and regulatory equity limitations. The Philippines is particularly active active in this because the Philippines has a 40% cap for foreign owners in any company that owns land, which doesn't apply, obviously, to the digital infra space in some portions. But what we've seen is that the carve-outs of these need to be very heavily structured if you're acquiring an infra co or an asset co from an existing entity.
All right, Jacqueline, thanks very much. I'm going to now shift the focus to national policy issues. I like to set the context of my question to Suresh by sharing with you some recent development. For those of you who are not from within our region, right? The Singapore government, together with the Malaysian government and specifically the Johor state government, have now taken a very strategic move, right, to create the Johor-Singapore Special Economic Zone. And as some of you may know, in Malaysia, they have also started to develop their own LLM, right? There are 3 large language model in Malaysia. Now, at the same time, we are wooing the Chinese to come in. Now, Singapore has taken a very interesting position. We welcome both China as well as US investment. We don't take side. We will never take side, right? So this is the invitation that the Singapore government have openly, right, declared. They welcome both to create value and hopefully collaborate with each other. So given this context, Suresh, I wanted to ask you, right, from a national policy perspective, maybe you can even start from a Malaysian national policy perspective. We're here in Singapore. Johor is our closest neighbor. Then there's the Malaysian setting, then there's the Chinese factor, then there's the US factor. It's kind of interesting, the environment. So what's your take on what are some of the issues and dimension in national policy at an ASEAN level that you think our investors in the audience today, right, should think about in terms of how they design their overall investment strategy to get the shortest time to value? Suresh?
Look, I think, it's a very good question there, Zaid. One of the first things you always need to look at, in my mind, is just to apply in terms of selection of opportunity, asset, or location, let's say, depending on, how you're looking at this investment opportunity. The very principle around, like this game theory idea of mini-max, right? What is your minimum, maximum loss? I think too often we rely and focus on what is your maximum profit. Actually, I think mini-max is a much better way to try and understand and pick between, 2 or 3 competing opportunities, right? It's very hard to really guarantee the upside, but you can be pretty sure the downside, has a number you can estimate, right? Pick countries that have a history, pick platforms, pick people like myself who are used to operating or have an understanding of the countries where there's a good track record of positive outcomes from a policy perspective. Get comfortable that not everything has been written down in an ASEAN country. I think even Singapore, probably some things can still be added, right? But check instead to see, has the country, even in ambiguous moments, generally, landed on outcomes over time in a positive way that's positive to national and investor objectives as well, right? And so you'll probably end up with a relatively consistent list of ASEAN countries where, you have an ability to not always 100%, guarantee the outcome, but you have trust that a logic is taken when a roadblock is hit, and the logic is pursued in a sensible and pragmatic way, which is a little plug for, my rather sometimes complex country, Malaysia. But, the good news is Malaysians always listen, and then they will try and work out a problem, right? We have a long way to work out a problem. But look, we created the special economic zone with Singapore, for God's sake, so that tells you something, right, already. So I think that's how you need to understand. Look at the country track record. Look at the platform track record of managing national policy people. We make a big effort at maintaining good relations, for example. We don't make a big effort of participating in thousands of projects. I think it's much more important that you pick platforms, founders, and teams that have an ability to understand, explain, represent, and bridge the gaps, on your behalf as well, right? So I think those are the key things to look for. By all means, countries that have as much written down as possible and much easier to interact with as well. But there can be countries that have strong policy documents but very poor enforcement. And very poor, continuing alignment on executing these policy documents, right? So I think proof is always in the pudding. Which ones have come out the other end over a 20 or 30-year period, across multiple sectors, generally landing on sensible outcomes every time, right? And that's, for me, always the best guide for thinking about whether you do A or B.
All right, Suresh, thanks very much. Okay, I'm going to open the session now to invite questions from the floor. If there are none, I hope there are, right? But if there are none, then I have a last round of questions from the floor. So can I invite the audience to ask questions to the panelists? Looks like risk issues. Right? Okay, we have one question. So can you hand over the mic to the last question? If you can, right, please introduce yourself, where you're from, so that the audience will get to know you a little bit better. Thanks.
Hi, Paul Carpenter from Hardiman, based here in Singapore. So 2 countries in the Asia region has recently reformed their regulatory position when it comes to the digital infrastructure space, one being Bangladesh, but then the other being Philippines. And knowing where Suresh does his business, the question is therefore about the Philippines with their, and I can't say the whole word, but the new KP law that's recently been brought in, and how that then changes the landscape for the investment in digital infrastructure. With both of these guys making changes, and to the certain extent that the Philippines, I think, have been looking at Malaysia in terms of the way to do it and how to ensure open access to digital infrastructure. Is this something that you think will be sort of noticed around the rest of the region and could have an impact on investor appetite for the Asian region?
Okay, Suresh, I'm going to invite you first, and then I will ask Jackie and Gautam whether they have any inputs. Go ahead, Suresh.
I think just for context, those who don't know, the Philippines passed a law called the Connectatong Bill, which is the connectivity in Tagalog, right? And I think basically stripping out the need for the congressional approval for franchises in telecoms, sort of making things a lot easier to operate and so forth. So that, I think, is what Paul is referring to. So I think, the Philippines, I think the simple answer is yes. But the difficult answer for the investor is, it's all written down now, looks very good. Now, what's the track record? And so the Philippines is an intriguing country in that there hasn't been much of a track record until the last 5 or 7 years in terms of the commitment to digital infrastructure. It's been a positive trajectory. We've had a very good experience working there. But, you're still going to have to make a call as to, I think if you're focused on the hard part of digital infrastructure, I'd say the Philippines is very positive. I think if you're contemplating entering as a ISP or a MNO, because strictly speaking, that's what it allows you to do, you want to have to think that through a little harder as well, right? So again, there's not many precedents, and this is the point in time where I think it comes down to a sense of belief around long-term objectives. So will the next government continue this policy or not, is probably the question that you need to ask.
Jackie?
So I think the bill was brought up and passed into law to address just the lack of access, basically, in rural internets and all that. And the hope was that this was going to spur both additional infrastructure growth, as well as additional service providers in the country. From that perspective, I would say yes. From just that conceptual perspective, there is a lot of optimism about saying it should spur growth. Basically, a broader investment base, there's more opportunity, there's less red tape. So yes, I think that's great. We've done a lot of work in the Philippines, both for telco towers, for ISP providers, as well as for data centers who are looking to buy in, as well as in the energy sector, which ties a lot of that into the data center space. I think our view is the Philippines is continuing to be probably, if you look in the APAC region, particularly in the ASEAN region, outside of the data center space in Malaysia, the Philippines has been the most active market in terms of transactional work in the last 12 months. And we expect that to continue, not just because of bills like this, but simply because of the demand and the need in the Philippines for continued infrastructure growth, whether energy, digital, power, all of those, and there is a populace that requires it. From a regulatory perspective, this is one step to cut regulatory roadblocks that used to be in place. A congressional license was something that took a long time and necessarily restricted the number of entrants into the market. But the Philippines has other regulations, for example, what I referred to previously around limitations on foreign ownerships in any company that requires the use of land, which means that if you are in a business that requires some access to land, you're always going to have to contract with a local party. So there are other regulations that could potentially interface with this desire to roll out additional infrastructure. I would say that the incumbents are in a strong position still, because there's a lot of connectivity and a lot of interconnection that would need to be discussed with the incumbents. But this could potentially spur additional growth. Again, as we're just going back to what Suresh says, it's now going to be based on your view as to whether the regulations are going to be strong enough, whether the parties whom you have to contract with are going to be willing to contract with that, and what's the cost of all of that, and matched against the returns that you expect to make. I don't know, Gautam, if you want to say anything.
No, I think well covered, Suresh, Jacqueline. I'll just say, look, the intent of the bill is correct. It makes sense. And it's addressing lack of connectivity in key regions. And I think that was also alluding to our earlier point around shifting national priorities, right? And with the right intent, we have to support that. I think the concerns would be around, the gatekeeping by incumbents, the connectivity challenges, potential, issues around overbuild, duplicative capex. Is the proposition clear for new entrants to come in and fill in the gaps? And also, why would the incumbents not be addressed in the policy that they need to open up as well, and they need to, given their strong positions, address this? So I think it's down to, the intent is fine, but the execution of the policy, the consistency of the policy across governments.
Okay, before I wrap up the session, can I just ask whether there are any other questions from the floor? Okay, it looks like there are none. So what I'd like to do now is just to invite the panel, right, to share in very briefly, right, the key takeaways that they feel is of value to you as members of our audience. So I'll first start with Suresh, right? Some key takeaways that you want to share with all our attendees.
I think for those looking at investment, just recap some main points I make. One is, pick investable countries that have a track record of good outcomes, or at least have a strongly demonstrated intent to improve the outcomes, if nothing else, right? So I think that's number one. Number two, make sure your teams truly understand the local context. That maybe as a data center business, even the data center business has so much local. We've been talking very much at macro level, by the way. The real issue in an ASEAN country is never the macro, it's really the micro, local councils, state laws, and navigating all of that and trying to, achieve a goal. So you need teams who know how to sort of work through the systems and, able to deliver on some of these investments as well, right? So those are the two things that I really think are key.
All right, thanks. Jackie?
I think, just to paraphrase the Ephesus philosopher, the only constant in life is change, and I think that's definitely going to apply to this space too, particularly in the regulatory sphere. I think we're in an era where what we know today could stay or it could change tomorrow. And I think flexibility and resilience, structuring for flexibility and resilience in both your governance structures, in both your contractual structures, your financing obligations and the like, is going to be a constant challenge and a constant focus for all investors in this region.
Gautam.
Yeah, so I guess three takeaways from me. I think we continue to live in a VUCA world, so volatility, uncertainty, complexity, ambiguity is what we're living with and we will continue to live with. Having said that, the growth proposition of the region we are in, the potential for value creation and to drive returns is clear. I think there's no change in that proposition. How do we address it given the VUCA world? I think we just have to make sure that we are seeing cycles through, making sure that the investors and their ICs are seeing the right proposition, as Suresh alluded to, in terms of the geographies which are consistent, even though it may take some time, but there's a secular direction on policy and enforcement. But also making sure that we are comfortable going through cycles, so we're not, let's say, sidelined by sudden shifts and volatilities, right? We've got to go secular and long-term in this part of the world.
Okay, so for my parting shot, I'll just share with you what the Singapore government have been saying and something that I truly believe in, right? There are no permanent friends or enemies, right? Only permanent interests, right? So the way that we're going to manage the strategic risks that we are encountering in the region, right, is to really at the end of the day, continue to focus on your corporate mission. How do you de-risk the environment? And how do you shorten your time to value in such a way that you could secure a much shorter time to achieve your ROI? With that in mind, I'd like to invite you to thank our panel of speakers. Thank you.
Thank you so much for all the panelists and chair.